Hi everyone, welcome to another weekly Forex forecast. My name is Justin Bennett with Daily Price Action, and in today's forecast we're going to talk about the Euro USD, the Pound USD, the Dollar CAD, as well as the New Zealand dollar versus the US dollar, and we're going to finish off with the Canadian dollar versus the yen. I do think we have some big reversals shaping up, including the US dollar versus the Canadian dollar and the New Zealand dollar, so you're going to want to stay tuned. Let's get started right now. A quick disclaimer that today's video is for educational purposes only. All views are my opinion and are not intended as investment advice. Forex is a high reward, high risk business, and you should not trade with borrowed money or money you cannot afford to lose. See the description of this video for the full disclaimer. Before we begin, be sure to hit that subscribe button below and also click the bell icon so you get notified every time I post these videos. First up is the euro against the US dollar, and I don't have to tell you that this was a big week for the pair. So if you go back and watch any of the recent weekly forecasts, you'll notice that I've talked about this potential bottom down here around 109. And I also mentioned the pair when it broke out from this descending channel and noted in last week's forecast that 109.90 would likely serve as support. And this candle, so this low right here, was actually 1 pip above the 109.90 level. And as you can see, the euro absolutely rocketed this past week. In fact, the pair didn't even pause at that 110.70 resistance level. So I wrote about this last week. Notice how this 110.70 served as support through this area. It then broke down and began serving as resistance. And notice right here, the pair barely even paused before it just took out that level. And as you can see too, we're on our way toward that 112 resistance level. Again, go back and watch those videos and you'll see that 112 was another key area we were keeping an eye on based on some of these lows and highs back through this area. And keep in mind too that all of this is taking place within this broader descending channel. So this is something that I've pointed out a few times, and I'll just draw it out for you again. So we had these swings in the market, and I mentioned it when it was back here, saying that the pair was at a swing low and that it also had more room to move higher than lower. I even wrote about it back here, and as you can see, we did bounce, but buyers really never got control of the pair. However, this bottom right here, they most certainly did. And I also mentioned that we could see a retest of this channel top up here. So I still think that, and especially if we can get through 112 over the next few weeks. However, it's also important to keep in mind that last week's rally didn't see any sort of real pullback. And look at where the 10 and 20 EMAs are as well. So this represents the mean on the daily time frame. In other words, this is the average price way down here. And notice where last week closed. So as of right now, the euro is approximately 130 pips above that mean. And what that means, at least for me, is that we could see some sideways price action over the next few sessions, at least below that 112 area, or perhaps even a rotation lower back into some of these new support areas. Now, there's no guarantee that will happen. For all I know, we could just blow right through 112 and come up here and retest this channel top. However, again, this pair is starting to get overextended. So unless you got long back here, which again, there were plenty of opportunities to buy the euro based on previous forecasts over the last few weeks, unless you bought down here, it may be best to stand aside and wait for some consolidation before you look for the next leg higher. Last but not least, you're going to want to keep an eye on what happens here on the monthly time frame. Now, this isn't a time frame I use often. However, this low right here of this candle is actually lower than the previous month. Okay, so September's low is higher than October's. What that means is that if we see the pair close above that September high, we could have a bullish engulfing candle on the monthly time frame, which can be incredibly significant. Usually when you get a bullish engulfing or a bearish engulfing candle on the monthly time frame, it often triggers a move of at least several hundred pips. So that's going to be something to keep an eye on as well. But all in all, it's going to come down to the 112 level and whether or not sellers can come out in force this week and push the euro lower, again, back down to one of these support levels. Now, key support is down here at 110.70, but don't be surprised too if we get a slight pullback and then some sideways movement before that next leg higher materializes. All right, so 110.70 is key support, 112 is key resistance, with a break above that exposing this channel top up here around 112.70. Next up is the GBPUSD, or the pound versus the US dollar. And this is one that last week too I said a push higher was likely given the way that this candle closed right through this area. All right, so we had an ascending channel drawn here, and this ended up being a false break. So this closed back above it, signaled strength and also the likelihood of another push higher. However, I don't think anybody expected the pound to rally nearly 800 pips from this low. All right, so this has been one heck of a rally. And as you can see too, the pair is still respecting these key levels. So last week I noted this 125.70 level. So notice this high right here, as well as some lows, and also these highs back here. Now look at what happened on this candle. We got this bullish pin bar right from 125.70, and that triggered last week's rally. Okay, so if I zoom in to get a better look at this pin bar, so this is the bullish pin bar I just mentioned, right from the 125.70 level. So notice these highs through this area, as well as this top right here. And we then had this bullish pin bar from the level. Now, another level that I mentioned last week was 127.70. So that's this area right here. And although at first glance, it looks like the pair didn't respect 127.70, it actually did, because this close right here was above it. And notice what happened over the next two sessions. So notice how the pair dipped back below 127.70 before closing back above it. And the next key level on our radar was 129.80, maybe 129.90. So that's exactly where the pair ended last week. And I do think that based on this, we could see a slight pullback this week, or perhaps some sideways consolidation before we get that next push higher. Just keep in mind that the pound is going to be incredibly volatile with all the Brexit rhetoric. And this is one that if you have a high risk tolerance, you can trade it. But for me right now, the pound is not something I'm going to trade just because of this volatility. Even if you notice these last few candles, the range on these candles is incredible. And so unless you have a really wide stop loss, this thing is going to take you out before it has a chance to move in your favor. So looking longer term, 129, so that area just below 130, right around here, is going to likely attract sellers. And that's just based on all of these lows back through this area. All right, now if the pair can get through that 130 area, so a close above it would then expose 131.60, maybe 131.70. So notice this swing high back here, as well as some lows and highs through that same area. All right, now of course, the one that everybody's watching is going to be this area up here around 133.50. So notice these two highs back here. So 133.50 on the way up is going to be key as well. But again, I do think we could see at least a slight pullback, perhaps some sideways movement before we get that next push higher. But as long as the pair stays above 127.70, I'm going to stay constructive and look for a move higher. Now, a close below 127.70 would expose that 125.70 area that I talked about last week, which again is where the pound broke out from with that bullish pin bar. So I wrote about the USD CAD on Friday, and this pair is incredibly interesting at the moment because we have several things going on. So the first thing that I pointed out on Friday was this descending channel, and this is something we talked about in late August. So we have this broader descending channel that began all the way back here in 2015, and we also have this more recent ascending channel. Now I'm on the weekly time frame, so you can see the magnitude of these patterns, as well as this ascending channel from 2016 and 2017. Notice too that this breakdown back here in 2017 actually triggered a 1,100 pip move lower down to that descending channel bottom. Now, that does not mean that a break here of this current channel is going to trigger the same move, but that is something that could happen. And the other thing I pointed out on Friday was the fact that the dollar CAD has recently been carving lower highs and a lower low. So this is actually one of my favorite ways to evaluate a trend and determine when a turn higher or lower is likely. So notice what happened back here. So right here we had a low and then we had a lower low. But notice what's happened since that late August swing low. We've had these higher lows throughout the last year. And we've also had, during that same time, these higher highs. And this, of course, represented the uptrend that we've seen here over the last year. However, notice what happened recently. We started to get these lower highs. And this, to me, signals weakness within this uptrend. And this swing low right here was actually the first lower low since all the way back here when this uptrend started. So again, we had this low and then we had a lower low. And this lower low right here was the first one since this price action right back here. So all of this could signal a turn lower for the dollar CAD. However, as I wrote on Friday, the pair did need to close below this channel bottom somewhere around 131.30, maybe 131.40. Now, based on Friday's close, it looks to have done that. But what's going to be key is how the pair reacts to that area as new support this week. All right, so keeping an eye on this thing on Monday and Tuesday is going to be essential to watch and see how the price action responds to that area as new resistance. And if we do see a push lower from the dollar CAD, the first level I'm keeping an eye on is going to be just above that 130 handle. So this swing low right here with a close below that, opening up 128.70. So notice we had this swing low back here as well as several highs. And a close below that would expose 126.80. So again, we have this rejection right here as well as several lows and also these highs. And those three levels also happen to line up with the Fibonacci retracement level. So if I drag my Fibonacci tool from this 2017 low, so from this low right back here up to this December 2018 high, look how the 38.2, the 50, and the 61.8 all line up with those horizontal levels that we just looked at. So those Fibonacci levels support the fact that any retest of that area above 130, 128.70, and 126.80 are likely to attract buyers and at least trigger some sort of short-term bounce on the way down. Now, if we see the dollar CAD push higher either from this support level over the next few weeks or even a break lower and retest of any one of these levels, it's going to take a close above that descending channel top in order to reverse the bearish outlook, at least for me. And again, it's also going to need to put in a higher high. So remember, we noted these lower highs back here, and it's going to take a push above some of these highs in order to reverse the short-term bearish outlook. And also keep in mind that any one of these levels that we just looked at could trigger a bounce higher and negate this entire bearish outlook. All right, so keep in mind that nothing is guaranteed in this business. And just because the dollar CAD sold off for over 1,000 pips back here does not mean that the pair is going to do the same thing. Next up, we have the NZDUSD, or New Zealand dollar versus the US dollar. And I made a video on Thursday where we took a look at a few things happening. First off, on the daily time frame, we have this higher low. Now, this higher low right here was the first one since this price action all the way back here in July. So notice how the NZDUSD had been carving all of these lower highs and lower lows again until this swing low. And we also had this descending channel, which after a downtrend like this can often serve like a falling wedge and trigger a bounce higher. And we also looked at the weekly and monthly timeframes here. So starting with the monthly, notice how the New Zealand dollar has recently come into this trendline support. So these are the 2000 and 2001 lows. We then have this bounce right here. And notice what's happened recently where the NZDUSD retested that trendline support. Furthermore, if I zoom in here to the weekly time frame, notice how we have this falling wedge. So this falling wedge support right here lines up with that trend line we just looked at right around 6,200. So I talk about this often, but we had this confluence of support around 6,200, and notice how the NZDUSD has rallied ever since. Now, as for the week ahead, I am looking for this channel top. All right, this channel top right around 63.40, maybe 63.50. I am looking for buyers to come in and support the pair if we get a retest of it as new support. And again, that 64.30 level. So based on these highs through this area as well as some of these lows, 64.30 is going to be one to keep an eye on the way up. And I do think sellers are going to come out and try to defend it. But again, as long as the New Zealand dollar stays above this area of support on a daily closing basis, I have to respect the potential for a move up to 64.30 with a close above that exposing 64.90. So again, we have these lows back here. This low, the pair broke down right here, and 64.90 began serving as resistance. Alternatively, a daily close below this channel top, and especially below that 63.40, maybe 63.50 area. So if we see the pair come back down and start closing below these levels and taking out Friday's gains, all right, that would be a sign of weakness, and it would also expose some of these lows. But again, as long as we're above this area on a daily closing basis, I have to respect the potential for a move up to 64.30 with a break there exposing 64.90. Next up is the CADJPY, or Canadian dollar versus the yen. And this is one that we've talked about a few times recently as well. I even pointed out this close right here, as well as this 81.80 horizontal level. So we talked about this region serving as support going forward, following this break above this descending channel. And I also noted the potential for this to be an inverse head and shoulders. So it's not the cleanest pattern I've ever seen, but it does qualify as one, as we have the left shoulder back here, the head, and the right shoulder. So as long as the CAD yen stays above this area on a daily closing basis, I have to respect the potential for a push higher. And we also have a few key levels coming into play right now, although I would consider them a little bit more minor. And these levels, so notice this area right here, notice this price action back through this area. So we have these two highs, and we also have this low. So this region right around 82.50 is currently serving as support. Now, if we see that break down, so if we see the CAD yen close below it, we could see another run at this 81.80 area. However, if we see buyers come in and push the pair higher, we could see a retest of that 83.20 resistance area. Remember too that the measured objective for this inverse head and shoulders. So if this is in fact an inverse head and shoulders pattern, all right, so again, this pattern right here If this is an inverse head and shoulders, the height of this pattern is approximately 400 pips. So if I measure higher by 400 pips from this breakout point, we get an area just above that 85.20. All right, so let's call it 85.50. And notice too how we have this longer resistance level that, again, I mentioned recently. And this is actually a descending channel. So notice on the weekly time frame, we have this descending channel that's formed, and the measured objective of this potential bottoming pattern, all right, comes in right around that area. If we continue to see the CAD yen push higher, we could see a push up into 83.20 with a close above that exposing 84.20, maybe 84.30, and a close above that would take us all the way up to the measured objective around 85.20, maybe 85.50. Either way, I have to stay relatively bullish as long as the CAD yen stays above this former neckline, which is also this descending channel top. So as long as the pair is above this area, I have to stay at least relatively bullish for a push up into 83.20, 84.20, and perhaps 85.20/50. Now, if we start to see a close below 82.40, 82.50, we could see again a push back into 81.80. And if we see this thing collapse and close back within this channel, so back below this channel top, all right, so close anywhere down here, that would negate the bullish outlook, and it would also expose some of these lows through this area. If you enjoyed this video, give it a thumbs up, leave your comment below, and be sure to subscribe to my channel. See you next time.